Hey guys, Barry Page here with Legacy Money. Today's video is going to be more or less a presentation. I'm going to share with you the infinite banking concept and try to explain it in a way that it's easy to understand. Without getting into the numbers, this is all about clarification. There's been a lot of noise out there in the marketplace, so I just want to make sure that you have a clear understanding of how infinite banking works and why it might be important. So let's get started. Okay, here we go. Becoming your own banker, understanding the infinite banking concept. Over the next 15 to 20 minutes, I'm going to walk you through the exact process that I use myself and teach to my clients, so you will have the same opportunity to become your own banker. I want to share with you the most important elements that I've learned over the last 20 years working with hundreds of families and business owners. You will not learn everything there is to know about IBC in this video, nor could anyone explain or educate you in that same time frame. But you will have enough understanding to make an informed decision as to whether or not this is a viable process for you to consider. And it's all from the book, Becoming Your Own Banker, from R. Nelson Nash. So I have to preface all of this by saying that I've been personally practicing IBC for well over 15 years. Nelson Nash personally mentored me, and I'm blessed to say that I was able to work with him closely over those 15 years or so. In the last 2 to 3 years, since his passing, with the advent of social media and all these short TikTok videos, there's been an abundance of people sharing this concept. Unfortunately, many of them are not authorized IBC practitioners, and some of them have stretched the truth, even using inferior products that the creator of IBC himself advised against. When the IBC practitioner program was first created, I do have to admit I wasn't convinced that it was the best thing for my own selfish reasons. I thought that since I had been doing this for years that I didn't need any more special training. However, now that this time has passed, I understand why Nelson wanted to create this program. It was so everyone would adhere to the same process, and that they wouldn't use IBC in ways that it wasn't intended. So I just wanted to caution you about that. If you're thinking about doing IBC or infinite banking for the first time, you definitely want to work with an IBC practitioner. You can become a practitioner yourself. You don't have to be licensed in our business to do so. You'll do that through the Nelson Nash Institute. Before we get started, why are you here? Nelson said that banking is in the hands of the wrong people. We have to take them out. So understanding why is very important. Simon Sinek said, start with why. If you have not seen his TED Talk, I'd highly recommend you see it. It's the 18-minute version. And Nelson recommended this many, many years ago. But your why is your everything. This is important to understand because why would you be willing to change your habits? Why do you think you have the discipline and the commitment to stick to a plan like this for years? You have to ask yourself that. Likely, you have a family. You may have children. You may have grandchildren. And you want financial freedom. You may have a business. You've thought about starting a business. You're going to need access to capital to be in business. And maybe you're fed up with banks. You're sick and tired of paying interest and fees to others. You're concerned about your money. Nelson said the process of becoming your own banker is ridiculously simple. It doesn't have to be sensationalized. It doesn't need to be complicated. So he created 4 simple rules. So here are those 4 rules of IBC. Number 1, think long range. We have to look 20, 30 years down the road, maybe even to the next generation, depending on where you are in life. If you have kids, certainly you're already thinking about their futures. And number two, don't be afraid to capitalize. Simply put, we have to put money into our system. We have to capitalize this plan. Number three, don't steal the peas. This is from the grocery store example in the book, but basically it means that if we take a loan while we're in our working years, we have to repay the loan. We have to set up a schedule to do so. So don't steal the peas. Number four, don't do business with banks. Now, what he's referring to here is taking loans with banks. Of course, we're going to need a checking account for convenience. We're not trying to replace our banks, but we can fire our bankers when it comes to taking loans if we're utilizing the IBC process. So I just want to keep it real simple and definitely don't want to make it any more than it is. However, this is going to be, it's going to be a change. It may be different than things that you've learned in the past. And Nelson said that it would be a paradigm shift for most people. So these are the rules. Think long range. Don't be afraid to capitalize. Don't steal the peas. Don't do business with banks. And we have to refer to these rules because there's a lot of noise out there if we want to practice IBC. The very first principle that must be understood is that you finance everything that you buy. You either pay interest to someone else or you give up interest you could have earned otherwise by paying cash. So we have to understand that, and that's hard to get our arms around sometimes because people just want to say, hey, well, I'll pay cash. But if you take cash that is earning interest to pay for an expense, then you therefore have lost the ability to earn interest. So we want to keep our money working and earning interest. This is the banking process. It is directly from the book, page 26 of the 5th edition. And, Nelson started the title of the book off with the word becoming your own banker, because this is a process. It doesn't happen overnight or even the first year or first couple of years. The banking process is outlined right here. And on page 25, Nelson pointed out that it will take the average person 20 to 25 years to accommodate all of their needs to finance. But once a system is created, it can be utilized, taught to loved ones, and passed on to future generations. Now, this doesn't mean that someone can't use or utilize this system sooner. They simply have to capitalize the system. And this typically is going to take at least a year, if not 5 years or more. But we can start utilizing it as soon as we want, as soon as we have capital available in the system. This would be cash value. And, we have to set up a repayment schedule if we're going to do that. Here's a quote from Henry Ford. It is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning. And I do believe that people are starting to wake up. They're starting to understand it. The Fed and, the higher ups at the banks, they want to make it complicated, but it doesn't have to be that way. Most people think that they need someone else to manage and take care of their money, and that they have to risk money if they want their money to grow. At least that's what the financial institutions want us to believe. Unfortunately, most people know very little, though, about the banking process. And it does take time to learn how it works. We're not going to get into all of that today, but I do have many other videos on the Federal Reserve and on banking in general that you can watch at your leisure. But for now, let's just understand we're talking about privatized banking, something that you can do on your own without the help of the traditional banks. And very few understand the impact on government spending and what that will do to all of our finances and our children's finances over the next decade or years to come. Take a look at this chart. These are actually screenshots from usdebtclock.org. If you haven't been to this website, it'll scare you. You can go there on your own. But I took two screenshots. One is from last year, and one is from just here the other day. And what I want you to notice is the total U.S. debt. It went in 1 year from 82 trillion to now over 93 trillion. So over $11 trillion of debt in just 1 year. Now, this doesn't even include our unfunded liabilities, things like Social Security and Medicare. And if you look at the total, you can see right now that's over $180 trillion. Now, we have to pay interest on this debt. Our interest on the debt is $521 billion this year alone. Well over $1.3, $1.4 billion every single day just to pay the interest on our debt. I want to congratulate you for watching this video because that tells me a lot about you. I still want to encourage you to read and reread this book, especially if you haven't read it yet, and teach others what you've learned. Because if you do, it will have a tremendous impact on your life and the lives of those that you love. So let's talk a little bit about the problem. Now, this chart here is directly from the book, Becoming Your Own Banker, page 17, and it's our annual pattern of spending for the average American family. Now, things haven't changed a whole lot. The spending pattern still remain the same. And, if what I just showed you about our current economy doesn't provide you with enough reason to take control of your finances, let's focus on the financing for a moment. So as you see here, we spend money on things like automobiles, housing, living expenses, and hopefully we're saving money. Those are the green lines. The red lines are the debt. Now, we typically have our money stored away on deposit with the banks, and also we may contribute to retirement plans, government IRAs, qualified plans that are managed by these same banks and financial institutions. Now, once we put our deposit or we invest in these programs, they are in control of the money, and they can use our funds for loans to others. That's how banks make money. They loan money. And they also use it for speculative investments, derivatives, other things that you or I may not even know. So there is risk involved. And we use these accounts, our checking accounts, to write checks, or we may use online banking to pay for our expenses. So again, back to this pattern of spending. The red lines are the interest that we pay for using this money, borrowing for cars, for mortgages, even our living expenses. People use credit cards or other forms of payment. So nothing has really changed a whole lot about that, but just notice that the red lines are much more than the green line, right? We just have one green line for saving, and all this other money is being transferred away to the banks and the financial institutions. So the problem is all of those items that we just discussed and more are financed by other banking institutions. So that means the interest portion, the red lines, of every dollar that we spend is perpetual. It totaled up to about 34 cents for the average American out of every dollar is spent on financing. It's the volume of interest that's the real issue. It's not the annual percentage rates. So if we need access to capital, if we need to borrow money, who is in control? The banks, the financial institutions. So typically, we have to go to those same institutions and qualify to get access to this money. We have to fill out loan applications. They may run credit reports. And this is not always an easy process. There may be credit reporting, penalties, and other stipulations to abide by. Meanwhile, our money is stored with these same institutions. They're in control whether or not our money is on deposit or it's invested with them. Now, if you've been doing this, borrowing from banks, you're not alone, but it's not your fault. We've all been taught to do this. This is what the banks want us to do. Nelson called them snakes and dragons. So what is the solution? Well, the good news is there is a solution, and we just have to start thinking like the bankers do. The infinite banking concept is a way to take control of the banking function in your life. So you'll never have to depend on the banks when you need money, access to capital. And it's called infinite because the possibilities really are limitless. Once someone understands the concept, they realize they have access to capital on their terms and they can become the banker. Now, this doesn't mean that it doesn't take time, it doesn't take effort and commitment, because it does. But if you're willing to commit to a plan, then the benefits will far outweigh any other options for financing. And if you follow the process outlined in the book and work with an IBC authorized practitioner, you can realize financial freedom. You don't need a government plan or retirement plan. And if you have one, that's fine. IBC can just make it better. The important thing to note here is that you are in control of your IBC plan. That means you control the funding, you control the loan and the repayment process. You determine how to utilize IBC in your life. We believe that you should be in control of this process, not the bankers. So regardless of where you are in life, if you spend money, IBC can help you protect and grow your wealth. So this chart here is very important because it just shows you that we all contribute to a pool of capital through the premiums. Hopefully dividends are paid. Dividends are paid by mutual companies. They're not guaranteed, but the companies we work with have been paying dividends for over a century. They obviously have expenses. They have death claims, but we as policy owners have access to this capital through loans and repayments. That is the banking. They also loan money out to others, real estate ventures, mortgages. And, this is just the process that the life insurance companies have given us through dividend paying life insurance. Nelson said that banking is the most important business in the world. And if you're in business, you probably understand this, but anyone can become their own banker, so they can fire their banker the next time they need access to capital. Just think about your money. Where does your money reside today? It's probably in the bank. You likely deposit your paycheck into someone else's bank every week or when you receive money. Think of the money that you spend every month. You transfer the money that resided in the bank to whomever you are purchasing from, whether it's an expense or an investment. In some cases, the financial institutions and the government have made it easy to have that money directly deposited in other accounts, so it doesn't flow through your personal bank, but it's now in the hands of other financial institutions. In other words, the bankers, gatekeepers, and toll takers all get their share as it passes through their systems. Changing this process so it flows through your system in the beginning is what IBC is all about. This change doesn't happen all at once. It has to be done incrementally over time. Banking as a business, let's look at it that way. If we're thinking like a banker, okay, and if you've ever dreamt of starting your own business, could you think of any business that would be better than having your own private family bank? The average person has the bulk of their savings or wealth on deposit with the banks or the financial institutions. And again, the banks are in control. Therefore, they dictate the rules. This opportunity to have our money work for us while we're utilizing it is what IBC is all about and is what makes it unique. Think about going to your local bank and asking for a loan. Usually the first thing they ask is, do you have any collateral? If so, they will typically take a lien on that collateral to loan you the money. And if you don't repay the loan, as they outline, they can repossess or foreclose on the loan. So what we want to do is create our own system to finance our own major purchases. With IBC, we simply use permanent life insurance as collateral for the loan. This ensures that the lending institution, the life insurance company, will be repaid. See, banking is a process though. It's not about the life insurance. And of course, there is no physical bank with overhead cost and headaches. We are the bankers. We control the banking function. Now, most banks will gladly loan you money and use your life insurance cash value as collateral for this loan. However, if you want to become your own banker and control that process, the difference is you borrow from the life insurance carrier. Your policy or contract remains intact and continues to grow uninterrupted while the loan is outstanding. And in this case, the death benefit is the collateral. So the owner of the contract can be in control of the process and the carrier has a secured loan. The objective, IBC, is to be in control of the process so we can recover interest that would otherwise go to pay the banks and redirect this money into an asset that we own and control. Now, there are many ways to do this, and Nelson outlines some different examples in the book, but there's one asset that has withstood the test of time. This asset is dividend-paying whole life insurance from a mutual company. You say our money has to reside somewhere, and this centuries-old life insurance just happens to be a safe place to store capital and utilize it as collateral. Someone has to perform the banking function, and we believe it should be you. We believe that life insurance is the cornerstone of your financial plan. Life insurance is really the only financial product that can stand completely on its own. You can use it for protection, you can use it for saving, and we're talking here about financing and growing our wealth long term. And then we can even use it for income in the future. Nelson called it passive income time, and you may refer to it as retirement, but this is a time that we can access this capital during those latter years of life. So life insurance is the cornerstone. You may be thinking you don't need life insurance, or you'd rather invest your money in other ways, and that's fine. This is not about earning a higher rate of return or replacing your other investments. It's all about how we finance things over our lifetime. And this may very well include investments. Think about using your own system to purchase an investment that then can produce profits. When you own an IBC designed dividend-paying, participating whole life insurance policy from a mutual company, you own and control this mechanism for banking. During our working years, we should be saving money to prepare for our financial future. And if we're doing that, saving into an IBC plan works pretty much the same way. And we use life insurance, and we're going to need financing over our lifetime. Our need for finance over our lifetime exceeds our need for life insurance protection. And if you solve for your need for finance through life insurance cash values, you'll end up with so much life insurance you can't get this past the underwriters for the death benefit. So this is on page 85 of the book, and it just clearly lays out our need for finance. And again, later in life, if our policy is capitalized correctly, we can use it for passive income. But everyone's situation is unique. Perhaps you want to leave a financial legacy, so this may be a way that you could do that. There's really no better way than with a custom life insurance policy tailored for you. Let's understand what's happening. Okay, I just want to recap everything. This is not a physical bank. There are no overhead costs and no headaches. Banking is not a product. It's not the life insurance. Life insurance is the vehicle, the instrument that we use. It is a process, okay? So we will spend enormous amounts of money over our lifetime. So someone has to perform the banking function with our money. And we believe using a properly structured permanent life insurance contract provides the best way to take control of this process. So it's really no more complicated than that. Okay? Getting out of financial prison must be a burning passion, though. This is going to require a change in priorities in life and recognizing that controlling the banking function personally is the most important thing that you can do in your financial world. That's straight from page 65 of Becoming Your Own Banker and from Nelson Nash. Okay, so just to understand, we protect our families, our businesses with insurance, and we can also protect our lives and our families with life insurance and keep financing in mind. We save money into this plan over time. And once there is sufficient cash value, in other words, we've capitalized the policy, the plan, and there's sufficient cash value in the process, we have access to that capital without further qualifying, without Mickey Mouse paperwork, Nelson would call it, via the policy contract. It's a unilateral contract that we can own and control. So, thank you for joining me today, and I hope that this helps you with your understanding of infinite banking and IBC. And if you've enjoyed this video, please let me know with a thumbs up and leave your questions and comments below. But if you want to take action, schedule a meeting. You can go to legacyinsuranceenagency.com/IBC. And remember, the longer you wait, the more you have penalized yourself. That's a quote from Nelson Nash. So I'll leave you with that. Thank you for watching. I'll see you in the next video.